Look at the charts right now. Something is shifting in a way we haven't seen before. Gold just hit $5,190 an ounce. At the exact same time, oil prices have dropped 35%. Most people are looking at these numbers separately. They think it's just a market correction or a fluke. But when you put them together, a different reality becomes clear. This isn't just about supply and demand anymore. It's about a fundamental change in how money is moving globally. Have you noticed how quiet the mainstream news is about this? Gold has always been the asset people turn to when they're nervous. But hitting over $5,000 is a massive shift in how people think. It means the old rules don't apply. Central banks have been buying up physical gold for months. They aren't doing that for no reason. They see something coming that hasn't been announced yet. Look at the volume of these trades. It's not just small investors trying to protect their savings. Huge institutional players are moving their capital out of traditional stocks. They're putting it into the one thing that can't be printed. Now, let's talk about the oil market. A 35% crash is a huge loss of value in a very short time. Usually, when oil drops, it's because the economy is slowing down. But this time feels different. Storage facilities are reaching capacity in record time. Production hasn't stopped, but the buyers are vanishing. Why would the demand for energy drop so sharply right now? It suggests that industrial production is stalling. Or maybe there's a shift in how energy is being traded. Some countries are moving away from using the dollar for these transactions. This is where it gets interesting. The connection between gold rising and oil falling is a warning sign. It often points to a massive deleveraging event. People are selling their liquid assets to cover other debts, but they're keeping their gold. They're actually buying more of it. Does that sound like a stable market to you? It looks more like a coordinated exit from the current system. You won't hear that term on the nightly news. They'll call it a rebalancing or a transition. Honestly, the numbers don't lie. You can see the divergence on every major exchange. When the cost of gold goes up this much, the value of your cash is going down. It takes more dollars to buy the same ounce of metal. Meanwhile, the cheap oil should be making things more affordable. But are you seeing lower prices at the grocery store? Most likely you aren't. That's because the cost of everything else is being pushed up by the currency's weakness. We need to look deeper into who is actually benefiting from this. Let's break down what's happening behind the scenes. For decades, oil was priced only in dollars. That meant every country needed dollars to buy energy. It created a constant demand for the currency. But look at the new contracts being signed today. Some of the world's biggest exporters are accepting other forms of payment. They're taking gold instead of paper currency. That's one reason the price of gold is climbing so fast. It's becoming a medium of exchange again. When oil isn't tied to the dollar loses its primary support. A 35% drop in oil price usually helps the economy. It makes transportation and manufacturing cheaper for everyone. But that isn't happening this time. Why aren't shipping costs coming down for businesses? It's because the currency is losing its purchasing power faster than the oil is losing its value. Think about that for a second. Even though oil is cheaper, the money used to buy it is worth less than before. This creates a difficult situation for the average consumer. You pay the same price at the pump while the producers receive less. The money is disappearing somewhere in the middle. Banks are reporting record profits while the energy sector is struggling. Have you checked your local bank's interest rates lately? They aren't keeping up with the rising cost of gold. If you have $10,000 in a savings account, it buys less every day. At $5,000 an ounce, gold is showing the reality of the situation. It indicates that the paper in your wallet is losing value. The oil crash is a symptom of a larger industrial slowdown. When factories stop running, they don't need fuel. When people stop traveling, the demand for gasoline decreases. But the supply of gold is fixed. You can't create more of it when you need it. That's why the big players are holding on to it right now. They know the current financial system is being changed. They aren't telling you this because they need you to stay in the system. They need your deposits to keep the banks functioning. If everyone moved to gold at once, the system would stop working. So they keep the public focus on the stock market. They talk about small gains in tech companies. But they ignore the massive loss of value in the energy sector. And they definitely don't talk about gold hitting $5,000. It's a number that represents a loss of control for them. For years, the price of gold was kept low by paper contracts. But those paper contracts are starting to fail now. People are demanding the actual physical metal. When there isn't enough physical gold to go around, the price increases. That's exactly what we're seeing today. Do you think this is just a temporary situation? Look at the historical data for these assets. These kinds of market moves usually last for a long time. We're only in the first stage of this transition. Let's look at what's happening to the global supply chain. Supply chains are starting to feel the pressure of this price gap. When oil crashes, you'd expect shipping to become much cheaper. But the cost of moving goods across the ocean is actually staying high. That's because the companies doing the shipping are hedging their bets. They don't trust the value of the currency they're being paid in. Some are even starting to ask for payments tied to the price of gold. This is a massive shift in how global trade functions. It hasn't been this way for almost 100 years. If you're running a business, you're seeing your margins shrink. Your fuel is cheaper, but your materials are getting more expensive. It's a strange contradiction that is catching many off guard. Why is the price of raw materials like copper and silver also climbing? It's following the lead of gold at $5,000. Investors are looking for anything tangible they can hold. They're moving out of digital assets and back into the physical world. This move away from the digital economy is a huge red flag. It suggests a lack of trust in the banking infrastructure. Have you ever wondered what happens if the banks can't settle these trades? With gold at this price, the collateral for many loans is changing. Banks that held gold on their balance sheets are suddenly very wealthy. But banks that sold their gold years ago are in a desperate spot. They are the ones pushing the narrative that everything is fine. They need to buy back that gold at $5,000 an ounce. Imagine the loss they are taking on those transactions. This is why the oil crash is actually a secondary story. The real story is the massive transfer of wealth into precious metals. The energy market is just the first domino to fall in this cycle. When energy is cheap, but everything else is expensive, something is broken. It means the labor and the materials are what people value now. They don't value the paper money used to facilitate the trade. Look at how manufacturing centers are reacting to this. They are slowing down production because the future is uncertain. They don't know what their products will be worth in 6 months. Will a car still cost the same if gold goes to $6,000? Probably not. The entire pricing structure of the global economy is being reset. This is what they aren't telling you on the news. They want you to think it's just a volatile market. But volatility usually goes both ways. Right now, gold is only going one way, and oil is stuck at the bottom with no sign of recovery. Does that sound like a normal market cycle to you? It looks more like a permanent shift in the global order. The countries with the most gold are the ones who will set the new rules, and the countries that rely only on their currency are in trouble. Look at the debt levels of the major economies right now. They are at all-time highs while their currency value is at a low. It's a recipe for a massive financial restructuring. You can see it in the eyes of the people on Wall Street. They know the game has changed. Most people are still checking their 401k plans every day. They see the numbers and think their savings are growing. But they aren't measuring that growth against the price of gold. If your account went up 5% and gold went up 50%, you lost value. That is the math that the financial advisors don't mention. They want you to stay focused on the nominal gains. The reality is that the purchasing power of those accounts is dropping. The oil crash is making the situation even more complicated for the public. It creates a false sense of security about inflation. Lower energy costs should lead to lower prices for everything else, but instead, we see the prices of food and housing staying high. This is because the cost of the currency is the real problem. Gold at $5,000 is a signal that the currency is broken. Have you considered how this affects your long-term plans? Wealth is being moved from the hands of the many to the hands of the few. The people who own the gold are the ones who will have the most influence. The people who own the paper debt will be left with very little. This is why you see big banks shifting their holdings so quickly. They are selling their stocks and buying physical bars of gold. They are also taking advantage of the low oil prices to fill their reserves. They are preparing for a world where the old financial rules don't exist. You might wonder why they don't just tell everyone the truth. The truth would cause a panic that the system couldn't handle. They need a controlled transition to a new type of economy. The oil crash provides a distraction while they reset the foundations. It gives them an excuse for the economic slowdown that is coming. They can blame the energy sector for the loss of jobs. But the real cause is the massive increase in the price of gold. Gold is the ultimate truth teller in the financial world. It shows when a currency is no longer backed by anything of value. We are reaching a point where the paper market can't hide the physical reality. The demand for physical gold is now much higher than the supply. This gap is what drove the price to $5,190. It won't stop there if the oil market continues to struggle. These two markets are now moving in opposite directions for the first time. It's a signal that the global economy is splitting in two. One part is based on tangible goods and precious metals. The other part is based on debt and digital numbers. Which side of that split are you on right now? It's time to look at your own holdings and ask some hard questions. Are you holding assets that have intrinsic value, or are you holding promises from a system that is changing? The news will keep telling you that things are going back to normal, but $5,000 gold is the new normal, and 35% cheaper oil is a sign of a slowing world. The signs are all there if you know where to look. Don't wait for an official announcement to protect your future. By the time they tell you it's happening, the move will be over. Watch the gold price and the oil price every day from now on. They are telling the story that the headlines are trying to hide.